Hello, hello. How's it going, everybody? Good morning, good morning. Welcome to a capital hungry New York market analysis stream. It is currently Thursday, July 29th, 7:23 a.m. Eastern. How's YouTube doing? How's the capital hungry private chat doing? Gold buys running good for the private chat, eh? Those 1820 buys almost level to level. And the 1812. And the 1803. I know this guy's in since 1803. He's still holding this too, so he's gonna wake up super happy. He's gonna wake up super happy when he or is you already here? Yo, Mini Banks. Are you in the Zoom chat right now? But anyways, let's get to business. Let's get to business. How's everybody doing? Can you guys hear me? Can I get a sound? Can I get a sound check, a visual check? Okay, so it's been a while since we've done these streams, but let's just get through the nitty-gritty stuff first, okay? Please take a second. Oh, what else we got going on over here? Damn, you're also in from 1803? Very nice buys, very nice buys. Capital hungry lifestyle. Alright, anyways, everybody, let's focus up now because we're going to be looking for some further trades through New York trading session, okay? But let's get through the nitty-gritty stuff first. We always have some new people in here who may have some questions, may have some concerns, alright? This is not direct financial advice, but after I go through the flow of how I do analysis, so basically, I'll start by looking at the fundamentals, any economic events, market sentiment, and then start doing analysis with the technicals and fundamentals on gold, then GJ, GPUSD, Euro USD, USD CAD, and then of course the US stock market index US 30. And I go in that order as well. So after I go through that analysis in that order, feel free to ask questions about technicals, fundamentals, and overall markets. Please do not spam the chats asking for signals or saying buy now, sell now, or any stupid shit like that. We're here to provide each other value on the financial markets, both technically and fundamentally, as well as understanding we are manual retail traders, so always keeping our emotions and psychology in check and keeping each other level-headed, you know what I mean, as we're navigating these markets and focusing on the risk management. Any questions about the capital hungry private service or the VIP service, please save that for after the stream. Just keep that out of the chat. You could just go to the Capital Hungry website or message me on Telegram. All of your Capital Hungry free resources, from news headlines to analysis channel to the webinars, are on the screen in multiple places. Okay? So you got it on the stream reminders for the YouTube channel. You guys got it on the stream layout. And you also got it in the YouTube description, all the free resources. And I'm just going to show you guys that right now as well. So obviously you guys are on this Capital Hungry YouTube. I've been doing some of these little short videos just to give some quick market updates, as well as I uploaded a video yesterday that if you guys watch this video, you should have already been in gold buys. You should have already been in GBPUSD buys, GJ buys, right? So if you guys watched this video from yesterday, only 700 people saw it roughly from 9 hours ago, but you guys would already have been in your gold buys from 1812 and 1820. But we're going to look for continuation points. Anyways, Capital Hungry YouTube, hundreds and hundreds and hundreds of educational webinars across technicals, fundamentals, and different topics, trading psychology, and everything else. This last webinar, super useful. The pandemic and central bank timeline and analysis. It's roughly an hour and a half long, but it starts about 13 minutes in. The Capital Hungry News Twitter. Websites like Forex Factory, they source from our Twitter as well. Even like Live Squawk retweets from our Twitter as well. So you have this news terminal connected to Twitter as well. Except it's not as many headlines as the actual news terminal itself, which is for the private channel members, but still a great free resource. You know what I mean? And then the Capital Hungry Telegram analysis channel. All right. Okay, now that we're through all that nitty gritty shit, let's focus on what really matters. First, we just want to go through and understand, as manual retail traders, we have to have even more attention and focus on our decision making process in trading psychology, because emotions always come into play. So make sure, regardless of whatever trade you take or whatever you are looking to achieve out of the market, you focus just as much attention, even more attention, on your trading plan, risk management plan, staying emotionally neutral and level-headed, as well as constantly developing your mental fortitude and psychology. Just as much as you might backtest the charts technically or starting to read fundamentally, try even harder to change some of the bad habits you may have in your day-to-day life that can probably impact your emotions and in turn impact your decision-making process. None of us are perfect. We're all human. We all make our mistakes and have different emotional patterns, personalities, backgrounds that is all going to make our trading journey heavily, heavily unique, right? So make sure you stay smart, follow your trading plan, follow your risk management plan, focus on the long-term vision, keep emotions out, and avoid crashing your account. Now, the main meat and potatoes. What we were focusing on in Capital Hungry, understanding what was really going to bring the next movement in the US dollar, the main movement, was going to be the following FOMC sentiment, right? So let's go back to the dollar here and the dollar chart. Basically, if we look at the dollar here and you even go to the 4-hour chart and we zoom out, if you guys also watch the webinar I just posted on central bank and pandemic timeline, it'll explain this, what I'm about to show you guys, in great detail. But this upside spike on the dollar from these historical lows was directly because last FOMC, end of June, start of July, we had the Federal Reserve give short-term signals regarding tapering, right? Regarding tapering, as well as also starting to talk about interest rate hikes, okay? You guys can, oh shit, sorry about that. Thank you. Sorry about that. It's been a while since I've been on YouTube. Anyways, this is the dollar chart, everybody. I got you guys. Okay? So let me start again there. So from these lows, we have this upside move here. See this impulsive spike on the dollar and then this continuation to these previous highs to the left? Right? This upside move on the dollar was 100% primarily because the last FOMC and Federal Reserve interest rate achieved new streamer. The last Federal Reserve interest rate the Federal Reserve started giving signs about tapering stimulus and rising interest rates. Now, if you guys want more information about this, go watch the webinar I just uploaded on my YouTube. But basically, to keep it short and sweet, when they are talking about tapering stimulus support and starting to rise interest rates if economic data rebounds, this decreases the supply of the US dollar in the markets and increases the demand, in turn having it go bullish and increasing the value of the dollar in the short term, right? So as we had that pullback, we made our way up to these previous intraday highs, but failed to break any higher, and then started to get exhaustion signs the same time we had the next FOMC coming up. All right. Now, the last FOMC yesterday, what we noticed was that the Federal Reserve said that economic data was not organically rebounding to where they needed to be yet. There's still heavy issues in the labor market. There's still supply chain bottlenecks. Economic data in the US is not organically rebounding. Inflation is still within their expectations, and they are still worried about potential COVID risks with the new variants. To summarize and keep it short and sweet, what they said, basically, they're not going to stop printing the US dollar until COVID completely disappears. All right? So what that means is that there's not going to be any tapering. There's not going to be any interest rate hikes anytime soon. Interest rates are staying cut and staying low, right? Interest rates are staying cut and staying low, and stimulus is going to continue. We even saw the White House looking to approve another $1 trillion for an infrastructure bill, right? So what this means is that initial rumor from the previous FOMC was false we fail to break this key significant previous high, we're entering bearish market structure, and stimulus is going to continue, asset purchasing is going to continue, quantitative easing is going to continue. They're still going to support the economy as long as COVID is active. Economic data is not where they need it to rebound yet. So what that means is the Federal Reserve is telling us that the US money supply is still going to continue to increase while the demand of it decreases, because the demand is going to be in the stock market. They also do not want to abruptly raise interest rates, because if they abruptly raise interest rates, it'll bring a lot of volatility and uncertainty to both the US stock market and the US housing market. One of the reasons North American housing market has been so extremely bullish besides foreign investment is because interest rates have been so low and the wealthy have been buying up houses alongside corporations like a fire sale with the extremely low rates. So if rates were to abruptly increase at the same time the dollar is so devalued in buying power, it would really shake up the housing market and have a major impact there. And the Federal Reserve acknowledges that and wants to avoid that, right? So pretty much what I'm seeing now, to tell you guys in short, is as long as stimulus continues, as long as US dollar continues to inflate in the money supply and the Federal Reserve provides that support, dollar's going to take this same path down slowly back down to these lows. It's not going to melt down, but you're going to have the pullback phases, you're going to have the consolidations, but my expectations is over the next week through the next month, US dollar is going to continue back down. We're still going to have global equities continue bullish, riding the support of the central banks. When you look at global equities across the board, they're still all extremely bullish, either sitting at all-time highs or doing pullbacks from all-time highs, right? So what this essentially means is smart money and investors, they're riding with the central bank support, because it's not just the Federal Reserve who's going to provide the stimulus for the US. We also have the Bank of England doing the same thing for UK, ECB doing the same thing for Euro region, Bank of Japan, People's Bank of China, Reserve Bank of Australia. You guys get the point, right? So when we're looking at our sentiment indicators overall, our market sentiment and investor behavior indicators, you can see that the Japanese yen, safe haven currency, is still fundamentally bearish. If you guys want to zoom out on the intraday time frames there, Japanese yen is still bearish in structure with these lows printed and potential to revisit these lows. The volatility index, which is a fear and greed indicator, is still extremely bearish. The US dollar on the higher time frames, if you go to the daily and 4 hour, and even after FOMC, is still very bearish. If pop quiz, if you have your safe haven currencies bearish and your equity markets bullish, what's that telling you about order flow and the market sentiment? Where's money coming out from and where's money going into, and what's that tell you about market sentiment and investor behavior within the financial market? Yes, good job, good job. Correct, you guys passed the test. You guys passed the first pop quiz. There's going to be more pop quizzes. All right, so anyways, what I'm essentially looking to play, and if you guys have been following along some of those YouTube shorts, is playing that market optimism. But when we do analysis on gold, we have to understand gold is a precious metal, a safe haven precious metal. It's not a currency. It behaves differently than a currency. So you might be wondering, if markets are so optimistic, Jeev, why is gold going up? Do you guys want to know the answer? If you guys research gold's properties fundamentally and macroeconomic impact, whenever you have massive increases in inflation due to the printing of the US dollar during economic crisis, investors hedge their risks of inflation by pooling into gold. Also, we trade gold against the US dollar, which is short-term bearish, and you have that correlation to play, and interest rates being low is also a very bullish confirm for gold. So as long as interest rates are staying low, it's a bullish confirm for gold, as well as if the US dollar supply continues to increase, meaning inflation goes up for the US economy, if through figures we've seen with CPI and PPI prior. Let me show you guys. We got time. We still got 20 minutes until New York Open. So this was discussed in the last webinar I uploaded as well, but this is a chart of the United States money supply, all right? Not like the value of the dollar like on the Dixie chart, right? On the dollar index chart. This is the actual money supply. And if you go to the 5-year mark here, you can see within the billions and billions of dollars in circulation within the US economy that it was pretty stagnant from 2016 all the way up until 2019. But when the pandemic happened and it led to global lockdowns, mass fear, businesses, industries, factories being shut down, mass economic uncertainty, the central bank, Federal Reserve, had to take certain steps to flood the market and ensure corporate America doesn't go belly under, which would be a real economic depression, right? And to also provide stimulus to the US citizens through those stimulus packages that was in the trillions of dollars, and also to provide money to the corporations through asset purchases, corporate bond purchases, government bond purchases, so forth, right? So just look at this level of money supply in the US within circulation we were at for 5 years, and then the pandemic took us to exponential highs, right? You had an oversupply of the US dollar within the market. That's why the dollar value, when you look at the dollar index, has been so bearish. High supply, low demand, low value, low price, right? But the cost of this printing, the cost of this increase in money supply, as they use it to flood the stock markets and help the economy, what it does in the short term is lead to a massive increase in inflation. And we can see that if we look at a US CPI chart. I need to get some water, still early in the morning, right? This is a 5-year chart on US CPI, Consumer Prices Index, right? You can see that we had a pretty healthy increase in the cost of goods until 2020, where you go boom. You have an exponential increase, not this slow, gradual increase anymore, right? So what happens is the people who pay the price are the middle class, the poor, the working class, and the working citizens, because all the money goes in to flood the corporate America and the stock markets and help the government, right? And yeah, people got their little stimulus checks, but it wasn't really much. All the money essentially goes back into the stock market to help the 1%ers get even richer and make sure that they stay rich and keep their power intact. What happens is when the US money supply is this heavily increased, when you look at the dollar chart, right, you can understand when we go back to the dollar here and you go to the daily, that increase dropped the value of the dollar and the buying power from 103 all the way down to 89. That means for the day-to-day working class US citizen, not only is their cost of goods going up for the day-to-day stuff they pay for, like gas, eggs, milk, groceries, clothing, whatever it may be, and also because of supply chain issues, cost of goods are going up. You have one, cost of goods going up, and number two, the buying power of their dollar decreasing. It's a double dildo that fucks the middle class and fucks the poor even more. Do you understand what I'm saying? The rich and the Federal Reserve, the central bankers, they don't mind sacrificing, devaluing the US dollar to make sure the stock market stays forever bullish, because stocks only go up, right? When you look at the stock market after the crash, look, all that US dollar that's being printed out is essentially just going back into the hands of corporate America, who are also putting it back into the stock market with the Federal Reserve, right? That's why the same time the stock market crashed, dollar spiked up. Then the Federal Reserve started to further cut interest rates, increase US money supply, like I just showed you guys in the chart. And then you had this massive decrease in the value of the dollar, but all that money is going into the markets. The rich get richer. And now this is pre-pandemic levels. We're 5,000 points above pre-pandemic, even though COVID variants are still here, even though not everybody's vaccinated, even though there's still some countries that are locked down. Interesting, right? Because it doesn't matter anymore. They're the smart money, the investors, they're just riding with the support of the central bank. As long as those interest rates stay cut, as long as the US dollar printing continues, then you're just going to have this upside on the equity markets and stock markets, and you're going to have a drop in your safe haven currencies like the dollar, the Japanese yen, the Swiss franc. The volatility index will continue bearish, right? But the people who pay the price are the middle class, the working class, the poor, because they're having their cost of goods increase, and they're also having the buying power of the dollar they hold in their hand and they work so hard for decrease. But anyways, let's get back to some trade ideas now. So one of the reasons gold has been so bullish is because that massive increase in inflation. So investors hedge inflation risks by pooling money into gold and especially other commodities against the dollar, and interest rates being so low is a long-term macro bullish confirm for gold as well. Right? So in Capital Hungry, these guys will tell you we've been in a gold bias, gold buy bias since 1764, just scaling in buys, playing the overall bullish market structure on gold. What I mean by bullish market structure is all you have is upside moves, pullbacks, and continuations to the upside, or consolidation zone, minor pullbacks, but still continuations maintaining bullish market structure, right? You have buyers continuously printing new highs and just consolidating at those highs, and you never have them break previous low price points or key significant low price points. So when you go here and you simply look at gold structure, this was the last price sensitivity area at 1795, where we had highs printed, a pullback, and buyers took us into new highs. From this area, we had a deeper pullback, but it still maintained bullish market structure because the key price point to break was 1795. With FOMC, we spiked down to 1795, failed to break, and then had the confirms of US dollar weakness with interest rates staying cut, stimulus staying active, and in Capital Hungry, and even Ted, you guys know Ted and Raja, even in a chat, I'm in a chat with those guys, we were even calling the buys to each other, watching the Fed interest rate, and I told them too, I was like, yo, 1803 buys, 1812 buys, 1820 buys. So you can see the buys ran clean, and now we're pretty much going back to previous highs right now. All right? So I'm still in a bullish bias. I'm still in a bullish bias on gold. We just have to be cautious as gold has very strong reactions at previous highs and lows. I'm not expecting sells, but the safest set of buys would now be either a clean breakout above 1828, or on the lower time frame, a pullback to 1820, then continuation back up. Even if we get this pullback, I'm not selling the pullback. You know what I mean? I'm just gonna let the pullback happen. Like for example, on gold, like I told you guys, for the last 2 months, or since those lows were reached, and we still had inflation increasing in US dollar, a bit of short-term US dollar weakness, I've been in that gold bullish bias. So as a day trader, even though gold has extremely aggressive whipsaw moves, right? Even though it has very strong pullback plays, because you have to understand what creates this market structure where you have buyers enter the market and from a key demanded price point and extend to a high, what creates the pullback is buyers taking profit. The whole point of trading is to enter the market, risk something, and get a potential reward, then exit the market and reap your rewards. Nowadays, markets are so extremely efficient and fast due to technology that you have trading across all time frames by institutions, from high frequency trading to intraday day trading, as well as positional and contract macro trading as well. So you constantly have so many participants in the market creating these market waves across all time frames. But what creates the consolidation zones, what creates the pullbacks, it's profit taking within the trend and structure, or more orders entering the market, right? So whenever you see a consolidation zone in bullish market structure that doesn't break structure, you can't just say it's a technical resistance. It's really just an order block or liquidity zone where more orders are entering the market, and once you break above that previous high, you continue up, right? It's the same thing when you have buyers enter from a demanded price point, go to a seller's supply, they profit take, sellers jump in hand to relieve them out of the market, taking price to a more favorable demanded price point, and buyers continue up, right? When you look at the market simply between those buyers and sellers transactions, now let's zoom out and look at something like GJ. And I've been taught, and anybody who watches the Capital Hungry streams will understand this now. What do you see simply on GJ, a risk currency against a safe haven pair? You guys can see the arrows I was drawing on the screen? You guys couldn't see the arrows I was drawing on the black screen for a second. I made it black on purpose so I could draw on it. You guys couldn't see it? Okay. Yo, YouTube, could you see the arrows I was drawing? Okay, cool. Alright, no? Alright, anyways. So, after the market crash and we had Japanese yen of short-term strength, when the central bank started to provide that stimulus support, what are the only things... What is the simple structure on GJ? What is the only things you see on GJ? On the higher time frames, on the intraday time frames? You only see, with the fundamental support of the Bank of England, with the weakness in Japanese yen, you only see buyers jump in the market from lows, profit take at highs, and sellers jump in, extend into new highs, and play that market structure, consolidate, break out into highs, pull back, same shit. If you look at Euro USD, same thing. If you look at GBP USD, same thing. Now, that's because you have risk currencies against the safe haven currencies. Safe haven currencies are bearish during this time, right? If you look at a pair like USD CAD, which is the inverse USD CAD, your safe haven currency, is first in the quote. What do you have happen since the Federal Reserve started increasing the supply of the US dollar and the Canadian dollar gained strength as a risk currency? It's the exact inverse. Whether it's a seller structure or a buyer structure, USD CAD is just the inverse of Euro USD, essentially GBP USD, during these times where we're playing the market optimism and the support of the central banks, right? No, Euro GBP is a risk currency against a risk currency. Your safe haven currencies that follow market sentiment is Japanese yen, US dollar, Swiss franc. All right? But anyways, on gold. So on gold, that's what I'm looking for. Even if we get I'm pretty much looking for these type of trade ideas. Even if we're going to watch price action on the 1 minute time frame at these key price points and wait for our alerts. And I'm in a buyer's bias still. All right, the only thing we have to watch out for is that we do have US GDP at 8:30 a.m. Eastern and initial jobless claims, both at 8:30 a.m. Eastern. Initial jobless claims has been continuing to increase, showing us more unemployed people in the US, and we do have the potential for this quarterly US GDP report to be off, to be a poor report. So we're going to check that data out as well at obviously 8:30 a.m. Eastern, and we'll be looking at that over here. We'll be looking at that over here. All right. So previous jobless claims was increased to like almost 419,000. Now they're expecting a drop in it, but I still think it's going to be above the poll. And then this GDP figure, they're actually expecting a strong rebound as well on the quarterly data. But I think it's just going to create a pullback, give us the pullback, and continue with the buys. All right, so this is what I'm looking for on gold, the precious metal safe haven, which is obviously not a currency pair, so it has those different fundamental behaviors, and I want to explain to you guys why it's been so bullish. GJ. Now, obviously, the OGs, capital hungry OGs, hyenas, any OG hyenas, what bias am I in on GJ? What main bias have I been in on GJ for 8 months, 9 months, 10 months? Right? So simply looking at the structure here, we had highs printed by buyers, right? From these highs printed by buyers, we had a pullback phase to a more favorable demanded price point, which happened to be the last price sensitivity area that took us into these highs, meaning we had a pullback to here that never broke higher time frame bullish market structure, and it was a deeper pullback for the new quarterly candle and quarterly period order flow setup, right? Just like you see GJ many times after it prints a high, you can identify that pullback stage, you can identify the demand area you can potentially go to or consolidation zone. And all you have to do, whether it's a 1 day pullback, a 1 week pullback, is you can play that pullback, or it could even be a couple of days consolidation or minor pullback on the lower time frames here. All you have to do is wait for the breakout, maintaining bullish market structure, wait for the breakout of the pullback corrective structure, and then start riding buys back at least up to previous highs. Right? Same thing here. Here you have a consolidation zone, so you wait for the breakout of the highs of the consolidation zone. Same thing here, you just have these minor pullbacks in a straight bullish rally. Pullback, back to these highs. Pullback, back to these highs. So now when you're looking at GJ, as long as we start to stay above 153.5, 154, markets stay optimistic, UK equity markets stay bullish, we might get some minor pullbacks, but my target is these previous highs now. Simple, makes sense to everybody with the bullish market structure. As long as Japanese yen in the higher time frame stays bearish and starts to make its way back down to the lows standalone, showing me money coming out of the safe haven currencies if dollar goes down, Japanese yen goes down, volatility index goes down, shows me weakness in the Japanese yen standalone, right? Then I come look at the global stock markets and I see, oh, investors still look pretty confident in UK stock markets. Let me zoom out here so you guys can see the structure on UK stock markets. It's going to be the same as Dow Jones, just bullish, just overall bullish. We had this deeper pullback for the new quarterly period, but didn't break market structure. UK stock markets, these are all-time highs on UK stock markets. Shows me, okay, investor confidence is still strong in the UK markets, into the UK economy. We still have that Bank of England support. We're going to continue back. We might have some pullback phases, but we're going to continue to chug our way back to 156, then potentially break even higher. as that's all we've been doing in this bullish market structure, is upside move pullbacks. Buyers take profit at intraday highs, sellers jump into or leave them out. You come to a more favorable demanded area. This is the only structure you see on GJ. Right? So when we come here and you look at more of the intraday time frames and structure alongside the key levels and psychological price levels, all we were doing was identifying that bearish market structure and then waiting for the breakout. And ever since 149.5 and capital hungry, and if you guys have been following some of the YouTube shorts, we have been in the buyer bias. The same way you see that structure I just showed you guys on the daily is the same way I read market structure on the intraday time frames, on the 1 minute time frames. It's been intraday bullish. Buyers printing highs, having minor pullback phases, and continuing up to the highs. So when I come on GJ here, what do you guys think my bias is? Pretty much on GJ, I'm looking for either a deep, if we come below 153.2, a deeper pullback to 153 buys. Even if we come back to 153.200 again, create a support buys, or the breakout above 153.500 buys. As long as Japanese yen stays weak, right? As long as UK equity markets stay solid and markets overall are optimistic with dollar weakness, I'm in this buyer bias here on the intraday time frames. If we get these pullbacks, or if we come up to these price points, I'm going to start looking at the 1 minute time frame for entry points to enter some scalps and intraday style trades. All right, I would only look for GJ sells if we came below 152.500 and broke the intraday bullish market structure and had Japanese yen strength and market fear that that investors are actually digesting. Because El Hanouni, he just asked a nice question. He said, hey, we're having inflation increases. We're having, let me go back to your question. We're having climate change fears, war. Can't this be potential fear to bring strength to safe haven currencies and weakness to risk currencies? No, not yet. First of all, climate change is something very macro and long term. The financial markets don't give a shit about that. But I understand, like, you're looking at different fundamental catalysts that could have an impact. That won't. War's been going on throughout history. Unless it's going to be some real potential World War III stuff, or the US actually going into physical conflict that's going to be constantly on the news or impacting oil supply or demand, that's not going to have too much of an impact. So pretty much, unless there's a war with North Korea or a war with Iran, that's all out the window for the time being. Can it come back to the scene? Sure, but not for the time being yet, right? Inflation, you have to understand, we can see inflation is increasing in the short term, right? But every time the central bankers speak and they give out their FOMC statements or the Bank of England talks, you have to understand, they are the ones who control the currency, the credit allocation, asset purchases, the value of the currency, and everything down the line, right? All they have been saying is inflation is still controlled within their expectations. So when they say inflation is still within their expectations and long-term goals and not to worry about it, investors don't worry about it. You have to understand, smart money and the investors, the guys who actually move the market, they follow the central banks. They have no choice but to follow the central banks and what their impact is going to be on the financial markets. Trade wars have been priced in since like 2019, 2018, 2019 when our big daddy Trump was in office. Yeah, and that's another thing. The market is always 2 steps ahead of the real world because of human psychology and greed. People are always trying to get an edge and be ahead of the curve. So you have that, you guys know that famous saying on Wall Street, buy the rumor, sell the news? That's exactly what that means. A lot of fundamental catalysts get priced in to the market way ahead of time before you actually have even the economic impact sometimes. That's due to greed and wanting an edge. So a lot of rumors will get priced in as actual impact, and it's not even actual news yet. The actual news gets sold off. It's already been priced in. That's the whole pricing in concept in a quick summary. And that's like a lot of that stuff you guys are talking about, like trade war. Trump was on that. We had the market impact on that for 2 years. Unless it comes back and has major economic impact, it's not going to be there. We don't really have anything crazy with actual Middle Eastern war yet. I do see it coming back to the table. Iranian conflict. I do see it coming back to the table, just not yet. Right? And in terms of inflation, investors are not worried about inflation increases because central banks aren't worried about it. We're having wildfires in Ontario? Oh shit, I'm in Ontario. What? We have wildfires over here? Yeah, but that's not going to lead to have too much of a market impact, you know what I mean? That's more like environmental. These guys burn enough money. No, I'm just kidding. Wildfires are terrible. Alright, so everybody, it's New York market open right now. Just 4 minutes into New York open. We have some GDP, US GDP, and jobless claims data in roughly 26 minutes. Okay? We're waiting for our GJ pullbacks to bullish market structure or breakouts above 153.5 buys. That's our GJ intraday analysis. Only sells below 152.5. On gold, I'm either waiting for a pullback to 1820, even deeper to 1812, or breakout above 1828. We're going to start watching 1 minute price action there. On GBP USD, remember, we had that softness in the dollar come from FOMC and the Fed still keeping stimulus active and interest rates very low and not looking at hiking interest rates anytime soon. In capital hungry, very similar to GJ, from our key level, we've been playing this bullish market structure with buyers only printing highs, creating pullback phases, and you get the idea here, right? And also if you look on GBP USD on the higher time frames, is extremely bullish as well, right? So now that we already broke out above 1.39, I'm either looking for a pullback to retest this structure at 1.39 buys, or buys above 1.4, waiting for the price alert at the key level. All right. Yeah, you have your headlines to the left of the screen here. We do have some Bank of England speakers, but nothing too crazy. More vaccination headlines. Nothing too crazy for headlines at the time being. On Euro USD, I'm looking for higher time frames are still bullish on Euro USD. We had this exhaustion by sellers at these lows, break back above previous intraday lows. I'm on the 4-hour time frame here. Break and retest above key level 1.8400, and US dollar weakness with euro equities very bullish and markets optimistic. I'm either looking for a pullback to 1.184 buys, or pretty much at this area, if we can get clean price action after the US GDP data, buys above 1.88. And we're going to be zooming more on the lower time frame price action here at this price sensitivity area. Pretty much if we get clean 1 minute closures above these highs after US GDP, I want to start targeting. Or if we don't break above those highs, I'm expecting a deeper pullback in the lower time frames. If we break below this order block, I'm not going to sell Euro USD. I'm just going to wait for the pullback and better buys. And USD CAD, we were in capital hungry. We were in sells from break of these order block lows. Obviously with FOMC giving us that weakness confirms on the US dollar. Risk currencies picking up more strength. overall bearish market structure being respected on USD CAD when we're looking at the daily chart. I'm primarily looking for a pullback to 1.25 and continued sells down. XRP has room for recovery from the last 3 months. Hey, if you guys want to jump into crypto, go ahead. I don't want to make crypto heads mad, but I look at all financial markets through the same psychological lens of greed, corruption, and historical patterns that they follow. If the central banks and the market makers have the power to drop something to sale prices like crude oil and crash oil to -40, or crash global stock markets to record lows, or crash currencies down to historical lows like the dollar, do you not think they have the power when they bring regulations to crypto to bring all crypto down? First of all, get rid of majority of altcoins, which are just being pumped and dumped, but bring down XRP, Ethereum, and Bitcoin to record low levels so they can bounce in at the prices they desire. A lot of people are going to be getting trapped at the 30, 40K price points on Bitcoin, trying to buy in or trying to jump back in crypto. And then there's going to be another wave where the market makers and the central bank, who are already making their own digital currencies, to be honest, they're already making the US digital dollar and central banking currencies. That's just going to replace the cash dollar and make a cashless system anyways. You don't think they have the power to drive it down to the prices they want to? You don't think guys like Elon Musk, billionaires, are just pooling in retail retards right now? Right? Bitcoin's gonna, in my opinion, it might have some short-term spikes. It might get some little optimistic waves there because all crypto buyers do is hodl, and they only focus on optimism. They only focus on what's positive. But Bitcoin, in my opinion, with regulations, with central bank intervention, with market makers wanting the prices they want and the power that they have historically and globally, they will be bringing it down to about 15K, even 10K. You know what I mean? That's my 2 cents. A lot of people send me hate messages when I say crypto's crashing, but when I called the crypto crash from 60K, nobody said anything. Let me find that. Let me find that. Where is it? Where is it? Where is it? Oh yeah, Big Short. So listen. I just want to give you guys an example, right? I don't know. I don't watch day-to-day crypto headlines. I'm not a crypto fanatic, but you guys know that I have a good understanding of market fundamentals, economics, market history, and just how the fucking world works, right? So I made $15,000 on this play, and I exited out at 30K. Look at the date. What did I say? This was at 60K. Michael Burry style. Alright? Alright? So I'm still sticking to that same logic. At the end of the day, bulls make money, bears make money, pigs get slaughtered. So if you don't know how to navigate the financial markets, if you're just a crypto hodler, then it's just not good. Like, you have to have some understanding, right? Yeah, it was just purely based on the regulations that were coming, the historical repetition, the fact that everybody in mainstream media was pooling into crypto. It's just so many signs that, like, it was probably going to come down, you know what I mean? All right. Okay, so we got the trade ideas laid out. We're still obviously just waiting for a breakout of these candle body highs on US 30 and buys there as well. We're just in a consolidation zone at the highs right now, but that does not mean to sell. Yeah. Okay, now we're just going to be waiting for those trade ideas over the next hour as this session is still running. And we're also going to check out the GDP data release and the U.S. initial jobless claims to give us more information about dollar movement throughout the day and to use that to our advantage as well at 8:30. I personally think GDP is going to be better than prior, worse than poll. Same thing with initial jobless claims, better than prior, worse than poll. So it might just have a bit of a neutral impact and then cause a little bit of a whipsaw and price grab. But I think dollar should continue bearish from the FOMC statement given yesterday about no tapering talks, no interest rate hike talks, support for the support for the economy staying active. We saw those White House headlines for another $1 trillion. U.S. Senate votes to move forward on another infrastructure package on $1 trillion. You know what I mean? So that stimulus is still staying active. That was yesterday. That was yesterday evening. We're still having continued headlines regarding vaccines and vaccinations. Right now, headlines, we haven't had much, just a bit of Bank of England speakers. But it's just giving us a bit of a GJ pullback, nothing crazy, you know? All right, I just got to go to the washroom quickly. If you guys want to send TradingView charts, you guys can send the codes. If you guys want to ask any questions in the chat, you guys want to send TradingView charts, I'll check out your charts, I'll check out your analysis, and I'll answer your questions. I'll be back in like 5 minutes. You're thinking about swinging buy gold next Monday after a weekly pullback? Yeah, that's what I'm thinking about too. As long as the US dollar stays weak, as long as inflation continues to increase, gold doesn't break that bullish structure, new weekly candle does a pullback, but Vespucci, wait for a deeper pullback because it's going to be a new month as well. This monthly candle is closing this week and a new monthly candle setting up. So gold might do a little bit of a deeper pullback, which is better for us, right? And then jump into some buys, and you could probably swing it for like the next month, in my opinion, as long as nothing changes with the Fed sentiment and they're going to keep interest rates cut and not taper off support and dollar stays weak. You know what I mean? Pauline, out of curiosity, how can the Feds revive stronger purchasing power of the dollar after printing so much money? By reversing the same tools they used to weaken the dollar and help the markets. That is increasing interest rates, right? Number one would be increasing interest rates. Number two is stopping quantitative easing, stopping asset purchases, instead selling off the assets that they purchases, such as government and corporate bonds, and just reversing the quantitative easing. And that is also a slow, steady process that they will be looking at. So they have the tools to combat both sides. They have the power to dictate both sides, right? It's just that when they exert those tools, it's the middle class that suffers and pays. It's the people that pay the price, all right? But let me go to the washroom. All right. All right, so we got 10 minutes till GDP. We'll just wait for that to get some more direction on the dollar and initial jobless claims. I'm still in a bullish bias on gold, just waiting for those price points of entry. GJ, just letting it do its pullback. I'm going to watch reactions at 0.200 as well on the lower time frame here between the PPLs. If we don't, because we might not break below 0.200 and get a nice scalp from this area as well. I'm very curious where you got all your knowledge from. Was it from university courses? I know I took just general business and marketing in school, which actually there was like a macro and microeconomics course in that, but you don't learn too much like real world stuff in school, to be honest. It was just from like, I guess, like studying the markets. I've just been focusing on the fundamentals and technicals for years now, since like 2016, late 2016, right? So it's like it's almost the end of 2021 now. It's like 5-6 years almost. Yeah, and look at all this. Look at all these webinars if you guys want to know exactly what I know. Obviously you're not going to learn exactly what I know just from watching the webinars I did, but it's no clickbait. You know what I mean? It's no clickbait. You have analysis I did like a year ago that would probably get like 100 views or something. You have psychology webinars, fundamental webinars, technical. It's not a Capital Hungry isn't really a course. It's more of a service that helps traders have an edge within the financial markets. But the first step of when you join Capital Hungry is to watch all the educational webinars. That's not on YouTube. That's on Vimeo. There's 50 plus educational webinars and Capital Hungry private channel. That's not on my YouTube. That's just for the private channel members. But I was just talking about for people in general. Like there's on my YouTube channel, you have tons and tons of webinars. You have higher time frame analysis, scalping sessions, educational webinars, psychology webinars, a bunch of these London trading sessions, some New York trading sessions, market updates, everything. Right? But in the private channel, it's like a service. You get access to not just like a course material. You get access, like for example, private channel members have access to this newsroom on the left. They also get access to the Capital Hungry Trade Room, which has like session alerts, key level price alerts, where we do our Zoom sessions and where we do daily New York trading Zoom sessions, daily market update and trade idea webinars at Asian session. You get access to the main feed. You get access to the BANTER chat. You get access to the library of educational webinars. I think in Capital Hungry, because I do a weekly recap webinar every Sunday, then we do a trading session every day. I also do a market update webinar every day as well at Asian, and we do a higher time frame webinars at the start of every month and towards like the middle of every month as well. Because of that, every single week for the last 2 years, there's over 600 webinars saved in Capital Hungry. So for everybody asking how I know so much, look at all that time and effort put in. 600 webinars day in and day out, doing trading sessions, doing intraday analysis, higher time frame analysis, giving out scalp trade ideas, daily trade ideas and shit like that, with fundamentals and technicals behind it, focusing on trading site. Like for example, within the main feed itself, every week members get first their psychology reminders, right? Like to journal, be smart, trading rules. They get a weekend news headline briefing. They get a weekly recap and refresher webinar, a weekly economic events and news report, a weekly political events and news report, then some market sentiment and investor behavior analysis. Then we do a trade ideas and market update webinar every week. We save that. Then we do our trading sessions every week. We save that recording. and we rinse and repeat that every single day, every single week. Always looking at fundamentals, looking at technicals, economic data reports, news, and everything else. You know what I mean? So that repetition. I'm not saying like you guys have to join Capital Hungry. I'm just answering your question of like, oh, how do you learn so much? You know what I mean? So like that's it's just that rinsing and repeating. It's just like if you were trying to go to the gym and get in shape, or if you were trying to be a professional athlete, or if you were trying to start a business. You know what I mean? It's not something that's an overnight process. You have to constantly rinse and repeat, go past your negative feelings and emotions. That's why we got the growth or feelings webinar here. That's why we got the power of choice webinar here. And you have to have extreme work ethic in what you want to excel in. For me, I wanted to excel in being a successful long-term day trader. I wanted to excel in my understanding of the markets financially, understanding of economics, understanding of human psychology. I wanted to excel in all of that. I wanted to master my own mindset. You know what I mean? I wanted to be in control of my decisions, in control of my destiny, my willpower, everything. I don't want my choices made for me. I don't want to be scrolling on social media all day. I don't want to be constantly looking at advertisements, looking at Lambos, like indulging in media that brings me no value. I don't want to eat like shit. I don't want to feel like shit. I just want to be a beast. So it takes a lot of effort to be a beast. Am I a beast yet? Probably not. Am I on the path to be there? 100%. And anybody can do the same shit. You know what I mean? No, I don't take every single trade I call out. That would be over trading. You have to understand, when I give trade ideas to the group, you have hundreds and hundreds of members from different time zones, different countries, different backgrounds, and also different trading styles. So I give analysis for people for scalp trade ideas, intraday trade ideas, swing trade ideas. For me to take all those trades would not be effective. It would not be efficient. It would be heavily over trading. So just because I do analysis and maybe give very good trade ideas doesn't mean psychologically and from your trading plan and risk management plan that you should take every single trade. That's just not. You're gonna burn yourself out. You're gonna over leverage. You're gonna over trade. You're gonna make an emotional error and mistake. You're gonna be too all over the place trying to trade like 3 different styles, 10 different pairs, or whatever it may be. You know what I mean? It's just too messy. You have to have control in your trading. You have to have rules and structure with your trading. Just like if you were to start a business or you were to build a house, if you were to build a house, you wouldn't build a house without a blueprint. You want exact inventory count of materials you need, cost of materials, the labor, how long it's going to take, the design. The same thing with your trading plan in yourself if you want to be a successful trader. You have to know exactly what 1 or 2 pairs you want to trade, exactly what trading style you're attacking, what you want from the market, your short-term goals, your long-term goals, your risk management plan, your trading rules of what confirms you need to enter a trade, the window and time period that you trade, what days you trade, exact detailed information. You guys want to see a trading plan of a member in Capital Hungry? You guys want to see what we do in Capital? You want to see 99% of you in the chat don't have a trading plan. You want to see a trading plan? Where is it? Where the fuck is Axel's, fam? Somewhere up here. It should be. It was recent, no? This Ash's was good. Axel's is crazy. Look at this guy's trading plan. Right? Intraday trading plan. First, we go through an interview of questions to ask yourself so you understand your financial background and you understand your risk threshold. You ask your questions. Why are you trading? What are you looking to get out of the financial markets? What are your short-term and long-term goals? right? How risk averse are you? Are you currently employed, working, a student? How would you define your personality? Do you have an aggressive, addictive personality or a docile, sheltered personality? How is your day-to-day emotional control? Are you easily agitated by minor things like being stuck in traffic or an incorrect food order? How much time per day can you dedicate to studying the markets? Not trading, studying the markets, right? Then he goes to the actual trading plan. What pairs he's trading, GJ and gold. What lifestyle? What style he's trading, day trading. What he's going to be looking for as per trades. The time window he's going to be trading, the risk versus reward ratio, the exact TP range, the exact SL ranges, the trade management steps. This is when I will secure partials. This is what a 1-to-1. This is a 1-to-2. This is when I'll leave 50% break even. This is what I look to trade manage. Right? How do you risk manage when you take a loss? How will you be looking to increase your lots? Will it be based on your growth of your account or your personal adaptation and feelings? What are your rules and confirmations for looking for a trade? Picture examples of exact trades you look for. Man even has a schedule of how long he's going to be following this trading plan to get enough data to optimize his trading rules. This is the amount of effort a small percentage of people are putting in the market. This is why, you know why 99% of people lose? Because 99% of people don't do this. They don't do shit like this. This is one singular guy's trading plan. His own little interview of a psychology, his trading plan and ideas, a schedule, everything. Emotion, psychology, risk management, trade management. Right? Okay, we just had the GDP data come out. Don't worry about it. We're still chilling. We wanted that pullback anyways. We're not rushing. It's just a new 30-minute candle. But majority of you don't even have a trading plan. You know what I mean? So just to be honest. Okay, so initial jobless claims. Everything is exactly like I told you guys. Better than prior, worse than forecast. Alright? So initial jobless claims is still like not at a good number. It's still increasing, right? But it's better than what they forecasted for the short term. They had a buffer on the forecast. GDP Q2 is still worse than what they expected, but 0.1% better than the previous quarter. You have to understand that GDP figure is still bad. That's only 0.1% better in a 3-month period from the prior quarter. You know what I mean? So we're still going to have our dollar weakness, I think, to play throughout the New York session. We're just waiting for execution points. So far, I don't see any GJ buys to enter. Gold, we're going to wait for the pullback to 1820 or break above 1828. GU, we're waiting above 1.4 or 1.39 retest. Euro USD, actually, Euro USD, if we get a retest of these 1-minute highs, I'm going to start to look for buys here. If we start to get a retest of these 1-minute order block, even if we just continue bullish here, we're going to start to make our way to the upside with that US dollar weakness we're going to get from that economic data. What that economic data shows us is that stimulus is not going to be stopping anytime soon. Jobless claims is still high, and the job sector is still poor, and GDP is still very bad, and that's a quarterly GDP figure. All right? So dollar should continue bearish throughout New York session, maybe have a minor pullback at this price point. But with that said, we should either get the pullback buys at 1820 or impulsive breakout buys above 1828 on gold. Euro USD, I'm waiting for the pullback retest of the order block and continuation. GJ, I'm waiting for better buys at 153 or the break, or if we come back above 153.200. UCAD, I wanted sells at a retest of 1.25. And GBPJPY, we're still waiting for because these buys were from London session. We're not. It's not like we can enter late now. I don't really want to enter at the high right now. I'd rather get a clean breakout or a pullback there. So we'll primarily focus on gold and GJ movement. And we have a new 4-hour candle. We have a new 4-hour candle, obviously in 25 minutes. NYSE at 9:30. Here's that set of data there. All right. What are my favorite pairs? First, precious metal, gold, safe haven, GJ, GPUSD, Euro USD, USD CAD, US 30. I primarily just focus on mainly gold and GJ. If you guys want to ask any if you guys want to ask any questions, send charts, feel free, because we're now remember, trading primarily 90% of trading is emotional control and waiting, right? So now we're just waiting for those potential price points to enter on gold, GJ, and the other pairs. So if you guys want to ask any questions, also take the time, if you guys want to have more information, go watch this webinar. It's an hour and a half long. It'll teach you a lot after this. Go watch all the webinars on Capital Hungry channel, to be honest. It'll teach you a lot about the markets. And the news Twitter here, this isn't as many headlines as the private channel gets. They get every single headline the news terminal gets, but this still shares a lot of headlines for free. Crude oil does not have too much of an impact on gold, like directly. Crude oil can have an impact on the US dollar, especially during times of high inflation, which can have an impact on gold. But crude oil inventories it's just inventory reporting for crude oil in the US. So it's going to have an impact on oil itself and maybe the dollar as a byproduct, but not gold. Actually, the only time crude oil inventories will have an impact on gold is if it's extremely undersupplied and there's supply issues. Then that can bring some fear to and have buyers jump into gold, but that's pretty rare. Overall, no. One second here. I'm just getting a quick phone call, but I'm just sitting here. Just let me mute for 1 second. No, Ted didn't say that, bro. Man, just trying to cause drama. That's why you're in those troll chats and shit. GJ's not melting. It's just doing a pullback. It's like it dropped like 3 pips here, bro. You gotta. Some of you guys are straight hyenas. 1 second. I just gotta answer this phone call quick. All right. Sorry about that. Okay, you guys got a couple questions here. What are your thoughts on reverse repo? Just another tool that the Federal Reserve uses. Nothing great. Like, I don't have too much of an opinion on it. Same opinion as all their other policy tools. Picking 2 pairs for a trading plan like UCAD and GJ are the inverse. Does it make it harder to trade or theoretically easier? It might make it easier because you can understand the correlations between the risk currency and safe haven pairs and then trading an opposite of that. What are the qualifications and eligible criteria to get a job in investment banks? Probably having a degree in economics and then knowing people in there already. How long does the dollar bear run continue? The dollar bear run will continue as long as the US keeps up the stimulus, where we just saw that another $1 trillion package, infrastructure package may be passed, and from FOMC yesterday that interest rate hikes aren't coming anytime soon, no tapering, and as long as COVID is active, stimulus will stay active, and the economy will stay in a accommodative state. Private chat, you see that? Accommodative. Alright, so dollar's going to continue bearish until the Fed start tapering support or rising interest rates. Can you explain why tapering creates market fear? For anybody asking questions about US dollar weakness and asking questions about tapering or interest rates or Federal Reserve, I just uploaded this 9 hours ago. It's an hour and a half long. This one, I just uploaded it 9 hours ago. So anybody who's got questions about US dollar, gold, pandemic, central bank, interest rates, tapering, policy tools, any questions about that, just go watch this webinar. Trust me, it's going to explain it in better detail. You know what I mean? It's an hour and a half long. It starts about 13 minutes in, and it'll explain all of that. All right? Anybody who has questions about GJ fundamentally and technically, go watch this. My GBP USD and GJ bias is the same. GU's gone up almost 1,000 pips from this analysis given. All right? The higher time frame bias, the fundamentals. Anybody who is struggling as a new retail trader, go watch these two webinars here. False expectations for new traders and how to have better expectations and better planning, and choosing one, growth or feelings. Anybody who wants to see intraday analysis or market update webinars, you have these market updates. You have these 2 to 3 hour long scalping sessions, right? Yeah, you have a lot of shit here actually. Wow. It's crazy. The Euro USD buys from here. Yeah, but sadly, none of this stuff is clickbait. None of this stuff promotes short-term satisfaction. Dow Jones analysis is the same for a year. The greatest transfer of wealth webinar is awesome. That's a great one. This webinar, these two webinars, are these 3 webinars? No, these 6 webinars will teach you a crazy amount. These 6 webinars. The crude oil one where we called the oil crash. The central banking, just about how central banking works and how you are a debt slave, how we are all debt slaves. The gold fundamental one. The greatest transfer of wealth, Dow Jones. The timeline of GJ fundamentally and technically. Right? Just trust me. Scalping, if you want to know more about scalping and how I scalp, 2-part series. The other parts are in Capital Hungry. Raja's in this podcast with me as well. Chart High Evolution of a Trader. The different stages you go through as a retail trader. The retard stage, the realization stage, the self-awareness stage, the time and effort grinding stage, the reward stage. Trust me, I was a retard too at one point. We're all hyena retards at the start. It's just about if you're gonna be self-aware enough to change yourself, you know? It's just the Capital Hungry's information overload. It's not really for new traders. It's not like if you don't know basics about like what a pip is or like baby pips type of stuff, then it's not for you yet. You know what I mean? You should go learn like the basic foundations first. Like obviously, what is a pip? What is a currency pair? All right, so let me check out some of your questions. Markets are pretty slow. It looks like we had most of the movement post FOMC and during Asian session and London session. So far, 45 minutes to New York is pretty slow. It looks like we're going to get better setups, like what Scarlett just said, after the new 4-hour candle opens in NYSE volume. Sorry, Dummy TV. My bad for ignoring your code so many times. I got you now. Chart this shit, right? Chart. Man, it's an invalid chart link. That link didn't work. Wait, so let me send it again. Send it again. Where the fuck did it go? How come this didn't work right here? And also understand, yeah, it's end of month. We're coming toward, we just had FOMC. We're coming towards the end of the week. And we're coming towards the end of the month. Yo, how come this chart didn't load here? It says, yo, Dummy TV, it says invalid chart link. I don't know why. Might be your permissions. Besides your webinars, are there any books you recommend to have a better understanding of the fundamentals? You could go read any university macroeconomics textbook. You could literally go Google university macroeconomics textbook PDF, and one of them will come up. That's within, if it's within the last 10 years, it's all the same shit still. All right, let me check out the other questions you guys were asking in the chat. GJ melting, guys. This freaking guys are going crazy. Fucking hyenas, man. Yo, don't forget to rewatch this webinar itself. I gave a full analysis on FOMC, on gold, on GJ, on market structure, on technicals, on some fundamentals. What the hell's going on here, man? Sorry, I missed some of your guys' questions. If I missed your question, just send it again. I don't want to scroll up through the chat again. If I missed any questions and I didn't answer your question, send it again right now. Yeah, I'm waiting for, don't enter EU yet. It's retesting the order block, but I don't like this price action where we have this exhaustion and a mirror play here. So don't rush anything on EU. There's been no trades called out yet. We're waiting for cleaner price action and setups after the new 4-hour candle in 12 minutes. Because there's no, I'm waiting for either the gold pullbacks or the breaks above 1828. GJ, I'm waiting for either a pullback to 153 buys on the new 4-hour candle or the break above 153.200. GU, I'm waiting for a pullback to 3.9 or above 1.4. UCAT, I want to pull back to 1.25 sells. But you guys have to understand, we just had volatility with the Federal Reserve interest rate yesterday. We just had strong movement through Asian session and London session, and it's end of the month, end of the week coming up, all right? So GU is flipping? What do you mean? Like, I don't understand. Can you please, like, what are the situation of price action on the next opening of a 4-hour candle? Assume it to be bullish trends in the daily and weekly. Then I just expect the 4-hour candle to make a lower wick to a previous price sensitivity area on the lower time frame. For example, like on GJ, when you're looking at the lower time frame, you can see you have this beautiful, beautiful bullish market structure, right? So worst case we're talking about on GJ is I want to look at these price sensitivity areas in the new 4-hour candle for better risk versus reward buys to revisit these highs and potentially continue higher. Because when you look at the 1 minute and the overall intraday structure, especially from just these lows, you've had some nice bullish market structure for the time being. So that's why I'm just being patient and waiting for key entry points. I'm not just gonna jump in a trade for no fucking reason. Jeeve, what do you think about gold retracing near daily levels? All the way back down to, I would only see gold retracing all the way back down to these lows and potentially closing bearish if US dollar picks up strength and we don't break these highs and see massive profit taking moves. But we could have this daily candle just close as is. You don't always have to have a wick created. For example, like this daily candle here didn't have a lower wick and just ended up closing bullish. You know what I mean? So that's pretty, with the current price action, it doesn't look high probability that we're going to come all the way back down to these lows again. How do you know so much? No, I just, fucking hell, man. What are some of the main turning points or light bulbs in your head that helped you learn to read the 1 minute price action? That all market structure, all concepts used to read price action and market structure is the same across all time frames. It's just the only difference is the time itself. And I noticed on the 1 minute time frame, I was seeing like exact reactions at very specific price points. It wasn't random. It wasn't like, and looking at these random hourly or 30-minute wicks. On the 1 minute, it was exact order blocks or double bottoms or similar patterns you would see on any other time frame, but it was on the 1 minute time frame at pre-planned price points on the higher time frame as well, right? So when you combine the fundamentals, higher time frame price points of interest, intraday market structure with 1 minute price action reading, you really get a good picture of what's going on across time frames and in the market, right? Like I tell you guys, this stretch of price action on gold right here doesn't look any different than the 1 minute chart for me seeing a GJ PPL to PPL trade. This is just gold on the hourly chart going through larger ranges. But the stretch of price action, the larger bullish candles, the minor bearish pullbacks, a little bit of consolidations. If this was a 1 minute chart and you told me this was 0.800 and you told me this was 150 flat, I'd be like, okay, nice little 1 minute run there, 20 pips. It's all the same to me. I just understand the difference in time frames and the difference, like, you know what I mean? I use the exact same concepts to read market structure, price action, patterns across all time frames. I just understand the time frame I'm playing on and what is relevant. Would you take a counter trend trade? Counter trend trades is a style and strategy of trading. There are 1,000 ways to trade this ever-changing and ever-growing market with so many market participants. You have, I literally have seen successful scalpers trade literally within singular minutes in hyperscalp. I've seen long-term positional traders. I see people who are contrarian traders and like to be more on the counter trend trade side and go against the mainstream or go against the crowd. So I have my specific style. With my specific style, I play with the trend. I play with market sentiment, market structure, and with the trend. I do not look for counter trend trades. Any type of counter trend trade to me, as long as it doesn't break structure, is just a pullback. Does that mean you can't play it? It's up to your trading style, what you're experienced with, and what your trading plan entails. Can you please list the advantages and disadvantages of taking an impulsive entry? It's taking an impulsive entry, like for example, every single thing you do in the market is going to have a risk and potential reward. It's going to have a downside and a potential upside. Like for example, you can't say one trading style is better than the other. You can't say scalping is better than swinging, or swinging is better than day trading, or day trading is better than long-term investing. right? It all depends on what you put time, effort in to literally sharpen your tools and learn your craft. That's number one, right? So just like taking an entry with more confirms has its advantages and disadvantages, so does taking an impulsive entry. The end of the day, the focus is on what goes better with your risk threshold and your mindset. If you are very impulsive, very aggressive, very let's just say addictive personality type of trader, then for you to better develop your mental fortitude, you should probably wait for some more confirms, and you should probably develop that discipline and patience, right? But someone who is very docile and very sheltered, you should try to push yourself to the limit and maybe test your risk adversity to see where you sit on that spectrum of risk threshold. Right? At the end of the day, all of us come from different financial backgrounds. All of us have a different scope on finances. Some of us are born into wealth. Some people have a different concept of money where $5 might mean a lot to you, but $5,000 might be fucking pennies to someone else. This is going to shift your mindset and how you approach money, how you approach the market. All of us have different upbringings. All of us have different personalities and risk thresholds. So even though we all trade the same market, even though there's a lot of things that we can keep static and we can teach each other, at the end of the day, that's why trading is so unique, because it involves so much of your personal psychology. It involves so much of your personal decision-making process that's been ingrained through your entire existence, how you were raised, your financial background, your culture, your family background, you know what I mean? How aggressive you are, addictive you are, docile personality. There's so many things that go into play that's going to impact your emotions, that's going to impact your decision-making process, that's going to have you see the markets potentially different than somebody else. That's why I just try to do my best within the private channel and with capital hungry public stuff and free stuff to give you guys as much information as I can of what I have learned and what works for me and what doesn't work for me, from the psychology side, technicals, and fundamentals, so you guys can at least digest and process that information and take what you can from it and add it to your own trading style. If that means copying exactly what I do and trying to go on that path, hey, by all means you can try to copy me. You probably won't succeed. You'd have to put in an equal amount of time and effort as me as well to succeed. Right? Any alternative to Bloomberg News Terminal? I don't use Bloomberg News Terminal. I have the Icon Terminal with Reuters. Is knowledge about price action enough to be a good long-term trader, or also do you need fundamental knowledge? It's just like you do need to have a good basis or understanding of economics in the financial markets. It's just like, if you want to be a successful trader, why would you want to limit yourself to just understanding half the game? If you want, for example, if you want to get yourself in shape, if you want to get yourself into a better physique or lose weight, can you achieve a certain physique or losing weight by just focusing on the fitness only and the workouts and not focusing on the diet or nutrition? Sure, you might see some changes in your body just focusing on the exercise only, but if you focus on both the nutrition side as well as the exercise side and the rest side, and you learn the ins and outs of all of that goes into muscle development or losing fat or developing a physique how you want it, you're probably going to look a lot better or have a better understanding or just have a better edge compared to someone who's not doing that. That's just how I see it. You know what I mean? But anyways, everybody, new 4-hour candle here. This stream's been going on for 2 hours now. Pretty quiet. New York, pre-New York was quiet. New York, besides that upside move we had from obviously 1820 breakout, which was nice. That was a nice continuation buy. We were seeing if New York Open was going to give us any retests or breakouts at 1828. We didn't get that. We didn't get any entry points on GJ to enter, just starting to range on the lower time frame here. We didn't enter no trades this New York session because we didn't get the confirms we needed to as per our analysis. But if you guys rewatch this, all those trade ideas I gave you are still active for the rest of the day as well as tomorrow. So make sure you rewatch this webinar, because the start of this webinar was just pure fundamental and technical analysis. All right. If you guys enjoy this content, please share it around in other trading communities you guys are in. Make sure you send the stream a like, subscribe. After, if you guys can do me a favor, even comment on the saved stream. All right. New 4-hour candles are just setting up right now, and we have NYSE in 30 minutes. But I got a couple of appointments I gotta head to, and this stream's already been running for 2 hours. Also, if you guys want more information about Federal Reserve interest rate, FOMC, and how I'm gonna be playing that dollar weakness to my advantage, watch this hour-and-a-half webinar as well that was uploaded like 10 hours ago. Turn on your post notifications, give a like, subscribe. I appreciate the support, everybody. I'll see you guys during the next free live stream, private chat. I'll see you guys later as well. This Zoom session wasn't recorded, so make sure you guys rewatch the YouTube stream as well, and like comment on the save stream after too. All right, I'll see you guys later.